Let's talk about legal ways to minimize your crypto taxes. In this video, I'm going to talk about forming a foreign company to minimize your crypto taxes and whether or not it actually works. First of all, if you're a US person, one of the most important things to understand is that US people, including residents and citizens, are taxed on their worldwide basis, meaning that no matter if you live and reside in the US or live and work in Antarctica, you are still taxed in the US on your income. The US is one of just a handful of countries that tax in this way, where it doesn't matter where you actually live, you're still taxed to your home country, but that's how it works in the US. And so no matter if you even form a company abroad or even working abroad, if you're a crypto trader and you're trading abroad, you are still going to be taxed in the US. But the strategy that I'm talking about today is forming a foreign company. And many people that form a foreign company do so without the intent to even reside or move from the US. And in these cases especially, there are not actually any tax benefits. That's right, there are not tax benefits in most situations to forming a foreign company for crypto trading or investing. And that's for a few reasons. And a lot of this has changed over time, and especially since 2018 and the Trump administration, which had implemented some additional taxes on foreign companies. But to break down some of the rules and basics, if you form a foreign company and you're a US person and US people own or control more than 50%, then it is considered a controlled foreign corporation, or a CFC. Controlled foreign corporations have a variety of additional tax filing requirements. And even if it isn't 50% ownership, if you form a foreign company, you're going to have a lot of new tax requirements. So a lot of the people online, social media, and out on the internet may advocate for forming a foreign company, but it's a way to add additional fees on an annual basis, additional tax filing obligations, but not necessarily any benefits, which I'll continue to talk about. So from a tax filing standpoint, you're now in this new bucket called a controlled foreign corporation if you're over 50% ownership. And in this type of company, not only do you have additional tax forms you need to fill out, in fact, some of the most complex tax forms are related to foreign ownership of entities and foreign assets. And so you have those requirements, but also a new tax called the GILTI tax. And this tax applies to companies that are in low tax jurisdictions but are owned by US people. And this tax came out during the Trump administration as a way to bring foreign companies back to the US, so that people that were forming foreign companies and moving their business outside the US would then have an additional tax, the GILTI tax, and now have to pay this additional tax. More reason to come back. But in the area of crypto trading, if you've got a foreign company, you've got to be aware of these things, because the GILTI tax in most situations makes it at least as bad as if you just pay taxes in the US. In many cases, it's worse than if you had paid taxes in the US. For many clients that we have that have foreign companies, we're trying to figure out ways to have it simpler and taxed just as if it would be a US company. So in short, from a standpoint of just forming it and minimizing taxes, usually that's just not the case. You've got these new taxes to be aware of. But also, if the work is not actually being done outside the US, you're just trading through an LLC and a foreign LLC or a foreign corporation, but you're doing all the work in the US, it usually doesn't have its income sourced to that foreign company anyways. It's all being done in the US, and so that foreign company might have US income filing responsibilities or capital gains because its activity was in the US anyways. Again, negating the benefits of the foreign company. The only times where there's benefits that we've seen is when the foreign company is owned by more than 50% by a foreign person. In those situations, you could benefit potentially from tax deferral, meaning that you don't pay taxes until the income is actually brought back to the US. But there are a whole variety of additional rules that apply, including whether or not it's considered a PFIC, a passive foreign investment company, which has its own set of taxes and rules. So one potential way is if it is in fact controlled not by US persons, but controlled by a foreign person. And sometimes we have people that reach out to us or say, hey, I've got officers or board of directors in the Cayman Islands or wherever it is, but they're really just nominees or straw people that do whatever the client or the US person says. That doesn't count. That still is US controlled. If you have partners or shareholders that are actually running the company, that are living abroad, and that they control the company, that's a different story. And there might be some tax benefits. But in most situations that we see, it's still controlled by US people where they don't want to give up control, right? If you're giving up 50+% to someone outside the US, you're giving them the keys to your castle. So there's a lot of downsides to that as well, which is why we don't typically see it happen. And so although if you structure it appropriately with foreign owners and you stay informed of the rules such as the PFIC rules and know how to manage those, there are ways that you can have tax deferral, but that's incredibly limited circumstances. So if you're considering buying a foreign company or forming a foreign company to benefit for your crypto taxes, you might want to think again. It doesn't work in most situations, and you might be just paying a large amount at first to set up the company, but even worse, you're likely to be paying a large amount on an ongoing basis for annual compliance, annual filing fees, and your tax returns. Even if you're doing all the work in the US, your tax returns are going to be much more complex, and you're going to be paying a professional like us to get the work done. If you have any questions, please leave them as comments below. We'll try our best to answer as many of them as possible. And if you've got a friend or you know someone that might benefit or has been asking questions about owning a foreign company, share this with them. Thank you.